Discipline is the bridge between goals and profits. In trading, it's your strongest weapon. Hello, traders. Welcome back to Your Nifty Guy. Today, we are diving into the key levels and strategies for tomorrow's session. So, stick around till the end because I have got some important insights lined up for you. If you find this helpful, don't forget to hit that like button, share this with your trading circle, and subscribe for more daily updates. Put down anything that you might have to say in the comments box as well. I read them all. On that note, let's get started with today's video. As usual, the video will be divided into two parts. First, we'll be analyzing about what we did in the markets today versus what we had planned. How did things play out for us? And in the second part, we will be discussing about the plan for tomorrow. Now, the reason why I started with the quote on discipline is something which is based on the trade that I took today. So that is the reason I always choose a quote with which I try to start my video, which kind of aligns with the either the trade that I had taken or the setup. So we'll start directly with the charts. So markets opened with a gap up. Now over the weekend, there was Jackson Hole convention in US where Fed Chairman Mr. Powell hinted at some future rate cuts. Now that is a very positive event. I had been following up with one of my regular viewers who had taken some puts home. Now on Friday, right after the markets, when he had messaged me that he has taken some puts home, my instant reaction was one good news over the weekend is good enough to mess with your position. And that is exactly what happened. And this is one of the primary reasons why I don't carry intraday trades overnight. I try to wind up my positions intraday itself. Maybe in the entire trading year, there will be one or two trades that I would have taken or carried forward. But then obviously that is also after a very good trending day where I have a lot of uh, cushioning in terms of the profit. So there is already a good amount of profit that has been captured. And in case if I'm anticipating the trend to continue, only then I will carry forward. So that has been only one or two trades, if I remember, over the last period of 1 year. So that is the reason why I do not suggest anybody to right now for the current scenarios which is there. Mr. Trump might come over, say anything positive, negative, it will have an impact on the market the next day. And anything, it can be anything. So that is the reason why I suggest not to carry anything. And obviously his position went into a loss right at the open. Now, with the gap up opening, our plan to create a short entry was at the start of the day, we had to wait for around here. Markets came down, broke up above the day's high, broke down below the day's low, again reversed. It was a volatile session. Now, I did not get any trade till the time we reached this level. Now, this is the 0.52, 0.618 retracement of this entire fall from the top. And as expected, uh, markets did give us a reaction around here. Now, my first trade and the only trade, sorry, not the only trade, the first trade of the day was around the, why I said only trade was because at the same levels I had taken two trades. Now, this is the rejection level or the resistance level which we had marked on our charts. Markets came here and then broke down below this. So this was kind of a, sorry for this. This is what exactly what I look for at rejection levels, a double top pattern, right? Markets came here, got a rejection, gave a small pullback, again broke down below the low. Now I had entered this particular position with my SL just above this particular swing high, which got triggered in the very next candle. It was a very short-lived trade. Now, the reason I started the video with the quote on discipline is no matter had how long have you been in the trade for, if as per your predefined, right, before entering into this particular trade, right, as soon as the market has given this pullback and I had decided, okay, at the break of this swing I will be entering a short trade and my SL will be right around here. No matter what happens, if the market triggers your SL, you are going to take the SL. Now this is exactly the place where I took the SL, the first trade. Everything was absolutely as per the plan, as per the scenario. But the very next candle, this was just a liquidity sweep, which also took away my small stop loss. I entered around here. exited around here. It was a very small stop loss. But then again, this became a good a long rejection candle from the top. And as soon as this particular low broke down again, I entered into the puts again. This was a re-entry. My original direction was right, but then again, see what people mostly do is they will wait in hope around here. Now, if they would have waited today, it will have worked for them. But will it always work? Absolutely not. Markets could have very well been this could have been the liquidity wherein markets broke down below this double top and reversed immediately on the upside by taking liquidity of people who had shorted the markets around here like me, and it would have gone up. So that is the reason why if the market comes at your predefined stop loss levels, number one, you have to take the stop loss. Number two is when we will decide if we are to re-enter into the trades or we'll wait for further price action to develop. And that was the reason why I exited the trade first trade around here, entered the very same trade, very exactly the same strike price, exactly the same quantities when this particular low broke down. And as you can see, the trade was a good trade. I exited at this particular candle closing. The reason being very, very simple. I was in a short trade and this candle fulfilled all the three conditions. The low was higher than the previous low, the high was higher than previous high, and the closing was above the previous high as well. So that was the reason why I exited this particular trade around this level. So I hope the part of discipline as well as stop loss where you have to take the stop loss is very, very clear with you guys. Just a second, guys. My phone is ringing somebody else. Sorry for the disturbance. Right. So this was the trade that I took today. Overall ended in green because the stop loss was very small versus the reward which came in very, very good. Now what marked today was an extremely volatile day. No, the price did react and give us a trade around our levels. So this is also what you call the power of planning. Had this level not been around here on your chart, would you have decided to take a trade around here? I doubt. This also coincided with the 25,000 round number levels plus the border area of the entire bigger weekly resistance, which is there on our chart since a very long time. So a lot of confluence events. So obviously a short trade around here was well worth to be taken. And as you can see with the re-entry, we still ended up in green today. So that was a short trade that we did today. Now on the daily time frame, we'll be planning the trades for tomorrow. On the daily time frame, uh, so Friday was a big range red candle. Today, as expected, I also mentioned last video, it can be a sideways day. It is a clear-cut doji, extremely sideways. Now, there's one interesting development which is being observed, which I can observe around here. If you can see, uh, sorry guys, I had to pause the video. There was an important call coming. So yeah, there's an important thing that I am observing on the charts right now, and if that is something which is getting confirmed, we'll wait for that for confirmation. But as of now, this is the kind of head and shoulder pattern forming, which is forming exactly the shoulders are forming near the resistance levels as well as so that it actually makes this particular low as extremely important for us. So we'll be extending this. Now, for tomorrow, any long trade obviously will have to be taken above this level with a pullback. I will be taking my long trades for now until unless we are above the weekly fib levels. We'll be taking the long trades with a pinch of salt, as in with lower quantities. So this is the first trade that can be executed based on uh, the breakout of these levels and on the higher side. Needless to say, about with the head and shoulder pattern being in formation below this low, will be taking a short entry. Now, whether we will be trading between this range or not is something which is based on the kind of price action that is developing. But I will generally try to not trade in between these two, this particular level. which is today's range as well as this range, because prices around here will be volatile, and I will wait for the prices to give me a clear direction in which direction do the prices actually want to move in, and based on that I will be taking the trade. So yes, I hope, and there can be another trade, but I'll skip that. That is not a high probable trade, so I'll skip that in the discussion. So yeah, this will be the simple and sweet. I don't think it can get any simpler than this. You just need to wait for markets to go up above these level or break down below these levels. A lot of it will also depend on the opening. In case if the market opens flat, it will be a little volatile, and maybe again it can go sideways for a couple of days before actually eventually giving a breakout or a breakdown. So that is something which we need to observe and play accordingly. And yes, as option buyers, we need for clear direction to be able to trade. Option sellers can obviously trade non-directional. In case if it opens flat, they can short calls around here, short puts around these levels, and then they can enjoy the decay for the entire day. But as option buyers, we need a clear direction. That is something which I believe we should wait for instead of rushing into the trades. We should wait for a clear direction. So yeah, I hope this is it for today, and I'll see you guys again tomorrow post the market. Till then, stay safe, trade smart, and do not forget to like, subscribe, and comment on the video. Thank you so much for tuning in. Cheers.